It's always good to have you, Director Deese. The market is increasingly worried about earnings and the consumer. That's been the theme of this week. How nervous are you at the White House about these factors and the underlying economy at this point?
Well, we're constantly monitoring risks, but I would say the most striking feature of the current economy right now is its resilience. Having gone through all of the supply chain challenges we have gone through, to significant waves of the coronavirus and now the war in Ukraine, we are seeing a resilient American consumer and business investment, inventory accumulation that has held up, and a very strong labor market as well. So certainly there are risks, but as we saw in retail sales, the retail sales data earlier this week, the American consumer continues to power forward in what is really, resilience more than anything in terms of what we're seeing.
Yes, but I think it came as a surprise to hear from Walmart and Target that the American consumer is now shifting away from discretionary spending into more staple spending. Clearly, inflation is going to have an impact, and so is the stock market. Brian, you've got the S&P almost 20% off the highs, the Nasdaq almost 30% off the highs. Is that a concern about what it does to the market mood and consumer sentiment in a midterm year?
Well, absolutely on prices. You heard the president last week. Inflation is his top economic priority. And here's why. We have an economy with these historic strengths, as I mentioned, historic labor market recovery, but we're also facing historic challenges. The global economic environment presents significant uncertainties. The war and the attendant pressure on supply chains is putting pressure on food and energy. And so we need to train our focus on getting prices to normalize and under control. First and foremost, that is about giving the Federal Reserve the independence to operate, and it is moving. And we're seeing that flow through to the economy, but also on fiscal policy and what we as the administration can focus on, lowering costs, making things more affordable for typical families, as well as lowering the federal deficit. Those two steps together can really help to increase the economic prospects and sustain the resilient strengths that we have seen.
Well, and there's also in this effort to fight inflation, there's an increasing amount of blame being put on corporations by the Democratic Party. I'm sure you saw that the House passed this price gouging legislation to give the FTC power to go after energy companies if they are gouging consumers. Is there any evidence that that is what is contributing to inflation here?
Well, certainly the president has made very clear and has put all of our regulators on watch that when you see this type of market volatility, particularly in the energy sector, it's critical that we have the regulatory cops on the beat to make sure that nobody is taking advantage of consumers. I think the price increases that we've seen in energy markets, we know why that is happening, and it's because Putin invaded Ukraine. The war has taken Russian supply of product, but also Russian refinery capacity off of the market, and that has put upward pressure on price. That's why we have been very focused on doing everything we can to stabilize and increase supply, the historic release from the Strategic Petroleum Reserve, working to try to increase U.S. production in the very near term. Those are our priority focus areas. So
it sounds like you agree with the market analysts who say it's not the energy companies are making billions in profits and buying back stock because of the market prices. They don't have pricing power, do they?
Well, we're seeing high oil prices, and the reason why we're seeing high oil prices is because we have seen Russian supply come off of the market. There are definitely questions about the pass-through between oil prices and retail gasoline prices, and in a moment of volatility right now, particularly where we're seeing with crack spreads blow out and refinery margins as well, it is an important time for regulators to keep a close eye on those market developments. But our focus is on how can we increase supply, how can we reduce price pressures in energy markets overall.